Hello and welcome back to another episode of Fun Friday with a special guest, a awesome partner with Lone Star Capital. She is a top-notch capital partner that we get the pleasure to work with, the founder of Luxe Capital, Suja Shyam. How are you today?
Hey Craig, doing awesome. Thanks so much for having me.
Absolutely. Thank you so much for taking some time to chit chat and give the feed a little bit of background about who you are and some of the great people we get to work with, because you are, of course, one of them. Personally, I've had the pleasure of working with Suja for very long now. So you've been a repeat and recurring partner, one of the easiest to work with, best to work with. You always hit your number and more. So super grateful that you're on the show today, maybe to share some of your wisdom and kind of educate myself and the audience about kind of the deals that you look for, the people you like to work with, and maybe who you raise from.
Yeah, awesome. Excited
Awesome.
to share my story.
Yeah. So I guess just without further ado, if you could get kind of into your origin story there, if you will, your background, and then we can kind of go from there.
Yeah, absolutely. So I graduated from business school in 2010, and I had at that point during business school decided I loved the real estate world, and that's where I wanted to be. I had kind of decided that I wanted to just have a job with a salary right after real estate, right after business school, even though I had flipped a couple houses. But I just kind of wanted to get some more institutionalized experience. And so I actually started out underwriting multifamily apartment buildings for institutional buyers like banks who are participating in affordable housing programs, or we would do HUD loans. And so I got that institutional experience underwriting multifamily. But at the same time, I didn't have any mentors in the sort of business sense. I knew I wanted to be a entrepreneur. I knew I wanted to do bigger things in the real estate space, and I just didn't really have any mentors in the banking world. And so at one point, I just decided, I had actually a lot of things kind of fall apart all at once. One of those moments when your life kind of just happens to all fall apart at once. And, I look back on it now and it was like the best thing that ever happened because it forced me to kind of do a reset on my life. And so what I ended up doing is instead of just jumping into another job doing underwriting, I ended up traveling the world for 18 months. I didn't really know how long I was going to be gone. But on that journey, I kind of reconnected with my entrepreneurial route, entrepreneurial goals. And I actually Googled passive income from a hostel in Patagonia. And that was the beginning of me jumping back into entrepreneurship. And I tried out a bunch of different things. I realized at some point that I had some limiting beliefs around being in the real estate space, even though I had done house hacking and I had flipped some houses and I had underwritten for institutional buyers. I had some limiting beliefs and, doing things like various mindset coaching and whatever. I uncovered those and I realized that, like, okay, I can actually win in the real estate space. I just need to commit to it. And so I did just that. And then the next thing that ended up happening was I became what I call an accidental Airbnb host. So it was kind of my side hustle while I was working on my main hustle, but my side hustle eventually became my main hustle. And it ended up, I built that business, bootstrapped it, and it ended up replacing my corporate income and more in just the span of 3 years. And at that point, I decided, okay, I want to take the next step in real estate. And I decided I was going to look for partners. But it turns out that having business partners is actually, as you probably know, it's not that easy to find business partners that you really want to work with. And so I ended up deciding, okay, I'm just going to tackle one piece of this puzzle, which is the capital raising piece. And I'm sure I'll gain tons of valuable skills along the way before I decide what it is that I want to do next. And so that's when I founded Luxe Capital to help myself invest the profits from my own business, right? Because a business that generates cash flow is awesome, but if you have more cash flow than you need to have a place to put that. And also, I wanted to be able to help my friends and family and other people that I knew invest in real estate to diversify their portfolio, really achieve the kind of financial peace and stability and growth that they want to over the long term. So I started Lux Capital for that reason. And it's been just a wonderful journey since then. We've invested in a whole bunch of different types of deals, multifamily, self storage, short term rentals, and the list goes on. We also now do some private equity investing, and we invest in development deals. We have a land fund, and I could go on, but that gives you a general idea of my background.
That's amazing. Well, we have so much to bite off here, and I love doing this podcast for many reasons. Selfishly, I get to spend an hour with, kind of a coworker of sorts because, quite frankly, in my world, I'm a remote employee, and my capital, kind of extension arm of stuff is as much as my coworker as the corporate team at Lone Star. And I did not know that you had such a travel background. So first things first, I need to address that because
Yeah.
the childlike wonder pops up. So how long ago did you go on this 18-month voyage? Kind of what was the genesis there? And it sounded like you kind of had a kind of career switch where you just said, hey, let's kind of hit the pause and let's reflect about what I want to do moving forward. So can you please just mention kind of that story there, maybe where you went to?
Yeah, absolutely. It was a wonderful journey, and it started from a really difficult place, which is that three things happened in the span of 10 days that kind of pulled the rug out from under me. So my partner at the time and I broke up, and we had been together for many years. My job, as an underwriter, I we had gotten acquired by another company, and I would have had to move across the country to stay with the company. And then I was in an accident, and so I'm fine now. But at the time I had to have surgery, and I wasn't really very able to do a lot of things that I love to do. And so it just kind of like all of a sudden everything that I was devoting all my time and energy to, my work, my relationship, my activities, just kind of got stripped away from me. And it was just like me hanging out at home with my roommate's cat for a little bit, and trying to figure out what I was going to do. And I certainly had lined up plenty of other interviews. I mean, it would not have been hard to just go back into underwriting, right? In fact, I had offers on the table that I just ended up saying no to, thanks to a friend of mine who said, I was like, oh, maybe I'll go on like a month or two travel trip. And she said to me, just think about 100 days. And when I heard that, my mind just kind of made this mental leap from 1 or 2 months to however long I want to be gone. And, like, why not just take this opportunity, right? Because I knew once you go back into something, then I wanted to really commit to it. I didn't want to, just do it for a year or two and then like be back in the same place, right? So I decided to leave. I first went on a round the world trip, and I went to South America, Patagonia, Bolivia, Chile, and I surfed for a month in Central America. Then I went to Thailand and Myanmar, and then I went to Israel, and then to Portugal, and then to Iceland. And at that point, I came home and I went back to Argentina for another year. And so I just kind of slow traveled at that point in Patagonia because I spoke the language, somewhat well. And I loved the landscape. I worked on a horse ranch. I had a lot of awesome adventures just kind of working on different projects. And, I did what, you call slow travel. So instead of just kind of going from one tourist activity to the other, because they all kind of end up feeling the same. I mean,
Yeah.
some might not, yeah, but at some point it just kind of feels the same. So I ended up kind of doing these work exchange programs, which allowed me to sort of live in a place and work on something and really participate in the community. And during that time, basically what happened was I kind of realized that if I wanted to maintain a relationship with my family and my friends and community and maintain my happiness, I needed to generate more income because I didn't have any. I had a little bit of passive income from a rental, but I didn't really have enough to kind of really sustain a life except just being kind of a vagabond in South America, which seemed like a pretty good option at the time. But I decided I wanted more. And so that's when I Googled passive income.
That's awesome. So basically, if I'm hearing you correctly, 6 months were kind of the world tour, and then it was a year time of in Argentina, which frankly makes sense because if you want to kind of get going into things, at least Argentina is the same rough time zone. It's probably East Coast time zone, as I know you're a Pacific, West Coast person like myself. Going to Asia and being in obviously Israel, Europe's semi manageable. Obviously, South America is very manageable, but Asia is not manageable to work abroad. I wish it was because if that was the case, I may be living in Bali. It's that incredible. However, that's just not really realistic, unfortunately. So,
Yeah.
of those places, what was your kind of favorite place that you went to? Would it be safe to say South America because you went there for so long, or was it just more practical to be there?
Well, so I mean, I didn't actually start. I mean, by the time I started kind of my entrepreneurial path was towards the end of that journey. And so, I really didn't, I kind of started ramping up slowly and then I was back in the States and, I did, sometimes it's helpful for anyone who's on this journey to just attend events that are immersive, right? Where you can really surround yourself with people and get a lot of energy and good vibes to just kind of so that you can catapult yourself to the next level. So I did some of that while I was abroad. But then um, ultimately, I loved, there was this one town I loved, San Marcos de las Sierras, which is in Argentina. And I ended up staying there, probably I could have ended up living there, just because I loved it so much. The community was so rich. There were just gatherings, all the time of different sorts. And it was just the kind of place where everyone was just seemed so happy and life was really rich and simple. And yeah, and culturally it was very vibrant and people were so nice. And, I had a lot of fun there. So I felt very at home in San Marcos de las Sierras.
Yeah, it makes sense. And I think there's a lot of things here to point out and to kind of draw a comparison of traveling somewhere and living somewhere are totally different. So obviously, you want to go to the highlights places if, you're in the American way of living, which is, hey, you got a 2 week trip if you're lucky. And in that 2 week trip, you do the highlights. But living somewhere, totally different way to kind of understand how people are, to really take in and absorb the culture. If you can't live somewhere, which most of us cannot, at least travel there, but it's totally different. And then that's kind of a thought there where it's just the world is not necessarily the same in that respect. And the other thing is, you talked about being culturally rich, and I think the American way, another way to look at it, and it's something that I think everyone can kind of appreciate. In America, there's kind of one rich where people really care about, which is obviously your financial wealth, things of that nature, the status you have, what car do you drive, where do you live, what neighborhood you're in, where do your kids go to college if you have kids, the building that you live in, the neighborhood, right? But when you go to other places, there's other riches to think about, which is the cultural richness, being rich in experience, rich in friendship, obviously richness in health. And if you don't have the richness in health, you have nothing at all, really. So would you say a lot of that kind of impacted how you wanted to live moving forward with kind of just how you live your day-to-day life after experiencing the other riches in the community and culture?
Yes, definitely. I think that for me, one of the big takeaways from my travels is that my time is really valuable, right? Like, so I spent when I was working for as an underwriter, it was a relatively demanding job, and I lived for weekends and evenings, and I felt very limited, right, in what I could do. I would go to work even if I wasn't feeling well because I didn't want to use, like, I wanted to save up my PTO, and I'd have to really budget my vacation days, and if I wanted to leave early on a Friday, like I wouldn't necessarily get permission to do that, or something like that. So that just, to me, I cannot live that way. And so at some point I recognized that. And then when I was free from that burden of having to kind of live according to what someone else is prescribing for you, it made me realize that freedom for me was a very important value. Freedom of how I spent my time, of where I spend my time, of and just being kind of the master of my own destiny. And so for me, that was one of the things. And then also just realizing that simple living, you can have a very rich life where you don't spend a lot of money. I mean, the people that lived in San Marcos de las Sierras, I would say none of them were wealthy. I mean, there weren't big houses anywhere. Everyone lived very simply, but I mean, and they were lovely houses, but they just weren't like mansions and really anywhere. And so but people were very happy. They made art and music and dance, and they had community gatherings, and they laughed and played and raised their kids together. And I mean, it just was. And I don't even know what many of them did for work. Like I think they just kind of somehow pieced it together. But they didn't. No one really. There wasn't a sense of like scarcity or lack in that community. So
Yeah. And that's a really good lesson to think about. And I think another thing you hit on here, which is basically what do you value, right? You can't have everything. You could have some super, super wealthy, successful person who it does finance in New York City who makes, millions upon millions, tens of millions, maybe even hundreds of millions a year. But guess what? They can't take away their health's in compromise. They never see your kids. It's like, well, is that really a life worth living? And that's only a question you can answer there, that there's just more aspirations than just making money. It's also how you make money. And the biggest thing that Rob and I really focus on is who we get to work with, Dasha, as well as who we get to work with. We're at the point where we're kind of getting the choice of, choosing certain people. And, when we do calls and we work with people, it's people like yourself we want to work with, who we see yourselves with being indefinitely with. So it's not just the how much you make, it's who you make it with, and kind of focusing on that. So thank you so much for sharing that there.
yeah,
Switching. Yeah,
I'll
you
just
go.
add one more point to that topic, which is that um, I also realized that I wanted to be able to have abundance both in terms of finances and in terms of time. But where I started out on my entrepreneurial journey, because I had been traveling the world for so long, was I was living very, very frugally. And so I had very low kind of needs. Like the lifestyle creep had maybe gone up over the time I was working, but then I scaled it down like so much so while I was traveling that I just, it was an, I think that that was a helpful place to start bootstrapping a business, right? Because I just didn't need a lot I didn't need a lot of success, and it just kind of was able to keep building on itself. I had a longer runway. I had a little bit less, I had less stress, I would say. I had fewer needs. Like getting to time freedom was just a much kind of faster path. And then I could build on the abundance from that point. So I think, there is a place for frugality. You don't have to stay there forever, but if you can lower your needs, then it can really make a big difference in your entrepreneurial path.
No, I couldn't agree with that more. And I've kind of take the route right when I graduated college, I was living at home. And it wasn't cool to live at home. It wasn't cool to be driving Uber on the weekends. But I knew that ultimately you would hit pay dirt of being able to be in real estate long term to create the bigger wealth perspective where, you do eventually get time freedom. And now I've got probably more freedom than all my friends who kind of took the more conventional route, which is, hey, okay, there's nothing wrong with it. I just knew for myself if I wanted to have a disproportionate outcome or disproportionate result that would be unique, you'd have to do something that is frankly unique or going against the grain, which was kind of doing what I did at that point, maybe making very little money, but also not spending much money, having lower overhead and learning to live that way.
Yeah, definitely.
Yeah. So let's talk about switching gears into the institutional background. So you mentioned that was kind of the genesis of your career there, where you were doing underwriting and whatnot. And I really couldn't think of a better pedigree or better starting point going from either kind of underwriting, doing acquisitions, or asset management into kind of the role that you're in now, which is obviously a top-notch capital raiser. So can you kind of maybe share about your background and experiences doing the institutional background on your behalf, doing that perspective of maybe seeing a ton of deals, kind of going through all of them, going through the painstaking process of underwriting, getting close, but eventually not doing deals, and maybe how frustrating that can probably be?
Yeah, for sure. At the companies I was at, we would usually write underwriting packages that were around, 80 pages, let's say on average long, right? And that included narratives and spreadsheets and whatnot, but it was a very, very detailed process. It would take us, and we would layer these, but it could take us depending on, if we were doing equity deals, it would maybe be like a 3 to 4 month process. If we were doing HUD loans, it could be a 9 to 12 month process. So we spent a lot of time with each deals, and of course, I might have had like 8 deals on my table at one time, but it was a very long, detail intensive process. I would say much more so compared to what most people do. I don't know, just overall. Like, we had to go through everything with a very fine toothed comb. We knew that the kinds of questions that we were going to get in an investment committee were going to be very, very nitpicky. Like every single concern had to be addressed. And if it wasn't, then it was such a pain that you just knew that you had to do it ahead of time, and you learned how to do it so that you would have fewer kind of comments and times that you had to go back to investment committee. So, and then there's, we had to do every single area of due diligence, right? From obviously the financials to environmental to analyzing the sponsor and the GC and their financial capacity, et cetera, and the tax components. Like I did LIHTC for a period of time, and so that was a huge piece of it. The HUD loan, they have very specific criteria. Um, so it was just, it was a several month long process. And then, of course, if you probably know what it's like to be on one side of the table where you're the sponsor on these DD calls. They're very sort of, laborious, but, there's a reason why most institutions have a due diligence checklist, is because it's a very helpful way to organize yourself when you are trying to look at all these tiny little details. So, I would say that that was kind of the biggest lesson that I had when I moved from doing institutional underwriting to kind of the private placement world and looking at deals. Like I had to kind of shift how I looked at things, because, when you're actually trying to make deals happen, you have to look at them from a much higher 10,000 foot perspective rather than being in the weeds, right? And so You have to be able to kind of switch gears at some point, be able to have that filter, that flywheel of looking at deals and then deciding which ones you're going to dive deep into. And so I had to learn that skill. But overall, I mean, I felt like very well equipped to be able to apply just that. I mean, it was a lot easier, right? Like we didn't have to go into quite as much detail. Also, things are just banks are so conservative, right? So when you go into the deal making space where you're on the sponsor side, you have to be more willing to take risks, frankly, right? And so you have to be willing to kind of and you kind of have to be willing to be more of the risk taker, I would say. And so banks,
Yeah.
they're just never going to do that, right? So
Especially
yeah,
with banks, it's funny. I mean, if you're working on the debt side of things, your number one goal is don't lose money and make sure you hit that return. And a lot of times I've heard if you're on, the side of, institutions and whatnot, it's really like, okay, how do I not lose money here? And you get kind of bored in the weeds. And sometimes it takes a certain type of person to also be optimistic. And the fact that, hey, this is going to make money. Well, how is this going to make money? You got to believe in the rent growth. You've got to believe in the story behind the story, right? And some people get very pessimistic there. And sometimes maybe I would argue talk themselves out of making good investments from time to time. I'm sure they also lower your downside, but I'm sure there was a lot of deals that you saw that ended up doing really well, or you're really bummed that didn't make it through. But because you saw the value in the upside, and that's probably what you get to focus on now, which is seeing through that as opposed to, saying no to so many opportunities that you thought were fine.
yeah, for sure. And I mean, I also had the benefit of having exposure to different areas within our space, right? Like we also had an investors relations department, and we also had a special assets department, which is where you do workouts and stuff. And so I mean, I of course got to like talk to those folks and understand. Okay, well, we invested in deals that are now having issues, and we're having to work them out. And also like, well, what are the kinds of questions that investors are asking? What are the capital markets doing? And so, we did get exposure to all those types of those areas. Of course, most of my time was spent kind of head down underwriting deals. But yeah, you do have to kind of be, if you're going to be successful outside of the institutional space, you definitely have to be willing to take risks and go on a limb.
Yeah, and it's funny. At the end of the day, if you're on the sponsor side of things and raising money for deals, just realize the person who has that deal, if they didn't pay the most, they played very close to the most. So you're paying more than this property than anyone else. Therefore, you are telling the market, hey, of all the hundreds of deals that you're looking for, I believe this deal is good enough and quality enough that will make the money for the said projection, right? Which is a bold thing to do. It's not easy to, pay the most. I think people want to live in a world where they can get away with paying the least, but that just doesn't really work out. That's not how the market works. It's not how the game is. So the quicker you learn that, the quicker you kind of understand the game and move forward and be productive there.
Yeah, for sure. And also having ways to add value, right, that are unique and creative. And, like what you guys do with your affordable housing program, right, that sets you apart from other buyers because you have the relationships with the city to be able to do affordable housing and get a property tax exemption on properties. So, I mean, there are ways you can also set yourself apart, which can help with, pricing, I'm sure.
Yeah, and we're so lucky, quite frankly. And yeah, we can maybe pay a little bit more than the most because we can create a disproportionate outcome on that. Ideally, we don't pay the most all the time, and we can, give people the certainty of closing, which is very important. But, it's kind of just an interesting kind of thought here at a macro level. If we didn't have the tax exemption route, we would be a lot less busy, a lot less active, and done a lot less deals and built a lot less great relationships over the last couple of years and, doubled down on them. So we're very grateful for the opportunity to have multiple pitches, if you will, multiple ways to kind of be unique. Because when the market is going gangbusters, when there's no supply, when you can, do stuff without, a lot of development going online, rent growth's going great. Well, yeah, then everyone can do a value add deal and make money so long as you're participating in the game and you make good, prudent choices. But the reality is that that's not what the market is like all the time. And particularly right now, if there's a 10-year cycle, 5 years of which will probably be like, a time we're in right now, which is a little bit tougher or stagnant or maybe neutral to normal. And five might be, really, solid. good or gangbusters. So it's just this game, unfortunately, is cyclical, and having multiple wrinkles and ways to make money is definitely something that sets us apart, and why we're super lucky to be working with someone like yourself, because I'm sure that's something that you value, not only from a return perspective, but also from a ideological perspective, which is creating affordable housing and a way to kind of create some public benefit and good.
Yeah, absolutely. I mean, I started out my career working for LIHTC investor or syndicator. And so low income housing tax credits is what that stands for. And so I started out in affordable housing, and but there wasn't at the time a way to invest in it as an individual investor. And so to be able to offer that opportunity to my investors is really awesome.
Yeah, and so you mentioned some earlier on too, if you don't mind getting into it, which are sort of some limiting beliefs. So could you maybe talk through some limiting beliefs that you perhaps kind of worked through early on in your journey? Because that's crazy to me to think that you would think that way, knowing how productive you are, knowing how well you have done. But obviously, we all have them. So I think it's gonna be super relatable for anyone who might be getting into the business or is struggling, perhaps. What were some of those, and how did you overcome them?
Yeah. So, well, when I first started out my entrepreneurial journey, I ended up working with this organization. They were called the Foundation at the time. I don't think it exists anymore, but it was an overall entrepreneurial kind of program focused on SaaS development. And people went different directions with it. But in any case, I ended up going like the digital marketing route and choosing that as like how I wanted to build a business. Um, and at the same time, I kind of was like, well, I'm going to just maybe kind of slightly entertain real estate on the side, maybe like listen to Bigger Pockets and see if I can get anything going. But at some point, I just had I realized that like my attention was just too divided. I wasn't really loving how much time I was spending behind the computer. I didn't really love having high ticket. There's just things I just was starting to not love about the digital marketing space. And like, is this really what I want to be doing? It was a good experiment and I learned a lot. But and then I was like, well, I realized that I actually one of my clients ended up gifting me a ticket to Tony Robbins. I got to be on the floor, which those are pretty expensive tickets. I was like, as you were saying, as I was saying, I was living pretty frugally, so it was like a real treat, and it helped me realize that going to that immersive event, it helped me realize that like I actually have this belief that I cannot succeed in real estate as an entrepreneur. Or that I won't, or that it's too hard, or I'd rather work for a developer than be a developer, or things of that nature. And so it was essentially just uncovering that, and then just deciding, okay, no, I have realizing, like, I had a couple calls with people who were like, wow, you have all this experience, and underwriting and flipping houses and house hacking, and you've got a lot going for you. And it just made me realize that like I needed to shift my perspective, and just so I set the digital marketing aside, and I was like, okay, I'm going all in on real estate. And I had just a couple, it's that thing about surrounding yourself with people, right? So I had a call with like a friend, in the entrepreneurial community, people will just they'll kind of just give. It's kind of like this give and take. You build relationships with people. So I had a coach tell me something like that, and then I had another woman. I just still specifically remember the call when she was like, well, I think you could crush it in real estate, and just hearing that from somebody else kind of like allowed me to believe that like, oh, if someone else thinks I can, then maybe I can, and it's weird how deeply ingrained our subconscious beliefs can be. And so I really needed a little bit of outside input, and it's surrounding yourself with people and getting in an abundance mindset and continuing to knowing that we have to get leverage on our own brains and uncover those limiting beliefs so that we can get to the next level, and just you're kind of feeling your way through the fog. And then every so often you have like a breakthrough when someone, like one of those instances where someone gave me the validation I needed. So yeah.
Yeah, no, I think it's really relatable, and particularly to the younger people as well. To hear that message, if you're younger, or if you're kind of thinking about it or struggling through, just realize we all start somewhere. Realize that the most successful person and you are not that much different. It's just where you want to pour out your time, and as they say, the grass is green where you water it. But another kind of note I have there, which is it's important to have self-confidence. I think irrational confidence. I think we've all met people that have got irrational confidence and end up going very far. There's some people that maybe are just maybe in that camp before where you obviously knew you were talented, you were skilled, but having someone else believe in you and kind of also see your potential can really springboard you. So if you're ever in a situation, just general PSA here to everyone and obviously to you, if you're ever in a situation where you see someone's potential, you could be the encouraging person that kind of gets them over the seesaw there, teeter tottering on doing something or not. So just realize words are powerful, and also believing in other people and seeing potential is immensely powerful as well for people's journey.
Yeah, absolutely. And it's something I do try to do as well, knowing that it's those kinds of experiences had an impact on me, is really just helping people, helping boost people up in their own self view, right? So that they can see what's possible for themselves.
Absolutely. And it's funny, kindness and positivity is, karmic energy and well. And it's like funny. It's like, well, people remember interactions like that. And it's funny, even days from college to now where it's like, oh yeah, I remember so-and-so is a certain way. And that stuff does follow you and it does come back and pay it tenfold. It's obviously not linear, of course, but it's funny how if you are just a good person, good things start happening to you over the course of time. Go figure, right?
Yeah.
Um, yeah. So let's go now into, next steps, which is kind of what deals have you typically raised for over the last couple of years, and where are you advising, or maybe not advising, but are you recommending your clients, if you will, to kind of take a look at for a deal flow perspective?
Yeah, for sure. Well, as an investor, we're always growing, right? And so we are becoming I think there's this like, there's sometimes it's tempting to want to feel like you already know everything. And the reality is that we're always learning, right? And so I started out with an investment thesis, which was that I wanted my investors to have diversification within commercial real estate. And so we started out with self storage, and then we branched out to multifamily, value add. As probably many of you who are watching the show are aware, obviously things changed drastically in 2022 when interest rates started to go up at a very fast rate. And it just kind of made it very challenging for a lot of multifamily operators to keep cash flowing. Obviously there was some turmoil in the market, and um, the game changed, right? And so while we all knew that a recession was coming at some point, right? I remember in the late teens, people would ask, how are you preparing for the next recession? And then it just didn't come, and COVID happened. And then instead of having a recession, things just
It
went
was the
bonkers.
opposite. Yeah.
Yeah, things just went bonkers, right? And then you just don't know when the shoe's going to drop. And I think if you're going to play the game, you have to accept that there's going to be times when, certain investments are going to be timed incorrectly. And so, but what do you do when that happens? Well, first of all, you got to be prepared. So having appropriate diversification within your whole portfolio, um, going into that, so that not everything is tied to the same economic wins. And then secondly, of course, you want to invest in with operators that are going to tackle the challenge head on, and really navigate through the turbulent waters to kind of get the best outcome possible for those particular deals. Um, so since then, we have we have shifted towards also having a balance of cash flowing deals, um, tax benefits, uh, high growth opportunities, and then we've started to expand beyond real estate as well. So investing in small businesses, which are a little bit where they're just less impacted by interest rates. For example, real estate is extremely tied to where interest rates are, and we're in an environment that I think some would say is higher for longer at this point. And so we've got to be able to have diversity within our whole investment portfolio, so that that's not to say that real estate isn't still a very good investment and there's a place for it. It's great for capital preservation. It's great for tax benefits. It can be great for cash flow in certain instances. It can be great for growth in certain instances, but that is more dependent on what's happening with the economy, what time you bought the deal, etc. Um, so we I would say that when I talk to my investors about having balance within their alternative asset portfolio, or within their portfolio overall, focusing on cash flowing deals, deals with tax benefits, deals that focus on capital preservation, and then deals that focus on growth. And that can be different levels of growth. So, high growth versus, I guess, medium growth, or however you might say it. So, with cash flowing deals, we have business opportunities that cash flow 20 to 25% per year. And that's just a great way to I mean, often taxed as ordinary income, so you're not necessarily getting the tax benefits unless you have real estate professional tax status, which some of our investors do have. But it's still a 20 to 25% return. It's cash flow. Some of them are lower, right? We also have a deal that has a 10 to 12% return. So that's backed by a hard asset instead of backed by business operations. So when you have a hard asset backing it, when you're in first position, then you're going to get a lower reward for the amount of risk you're taking. So our tax benefit deals, I mostly do real estate for tax benefit deals. I know there's other ways to have tax benefits. A lot of people do oil and gas. We don't play in that space, but it is something that people should know about. For capital preservation, we usually are investing in hard assets for capital preservation. And then for growth, we're starting to invest in small companies as well that could have a much higher multiple, right? Like a 5 to 9x multiple in 2 to 3 years or something of that nature, right? And so when you can invest in a certain portion of your portfolio can be in these high growth opportunities, it has to be the correct position size, right? And you have to you have to feel really good about the opportunities still. We don't currently play in the venture space, but I know that is, for example, and other crypto investments, for example, could be a reasonable place to put a small portion of your investments. But we really like this private equity small business space because it's kind of like a nice sort of sweet spot where it's higher potential returns than you would get from real estate, but lower than venture. But you have a pretty, you have a lot more of a track record, a much clearer business plan, much clearer exit plan. You know who your buyers are going to be most likely. I mean, in the types of deals that we're looking for. So there's a lot more certainty around it than in, a super high growth opportunity. So those are the types of deals that we're looking for right now, in addition to having a diversified commercial real estate portfolio. When
Yeah.
it comes to commercial real estate, I love to invest in deals like yours, for example, where, you know, in this environment, I think just personally, I don't love just investing in plain value add deals because just because of where the market's at with interest rates and whatnot. We have to have like a specific advantage, right? And so having an affordable housing component where you're able to get a tax advantage and also fill a need, which is going to be, affordable housing, there's going to be demand for that in the long run. You're not competing at the top of the market with other market rate rents. So that's an example of, the kinds of multifamily deals we're investing in right now. We're very selective. We also like to do industrial. We're doing some selective industrial developments. Development can be a good opportunity. Of course, you could get a higher return, but there's higher risk. So how do you manage that risk? For example, in one of our deals, we've got a guaranteed maximum price contract that minimizes the construction cost risk. And we also our team has worked with this general contractor before. So it's a relationship that we know and we can kind of just rinse and repeat with that particular relationship, also have tax benefits. So we need to have kind of things that are going to sweeten the deal in this particular environment when things are more tumultuous.
Yeah, that makes all the sense in the world. And thank you so much for the very thoughtful and deep dive there. So, kind of a question I have with regard to some of the private equity places is this kind of a roll up play? I know that's a big kind of spot there. Is this like kind of buying existing businesses where there's a proof of concept? And that's kind of where this strategy gets different from venture, because venture, it's basically zero to something, right? Or maybe it's a new product that the market doesn't have yet. It could be an AI like thing. What is like the typical private equity kind of private placement business play that you would see? It would be like laundromats, stuff like that. What is that? What can that offer?
Yeah, for sure. So I'll just give you an example of one of the deals, for example, that we did that is a healthcare brokerage company. And so the healthcare brokerage company is very successful, and they are also doing they're limited by hiring because it costs money and takes time to hire folks. And also they're also making acquisitions, right? So they're strategically acquiring other companies of a similar size, kind of optimizing the operations there. And then the ultimate play is, and we already are in conversations with, various private equity operators. So that is a private equity roll-up play. In that particular instance, if we are successful in exiting, 50% of the company this year, then investors would receive probably their capital back plus double just in a year. And so, and then, we'd ride it out for another couple of years and then then another, second bite of the, so their second bite of the apple would come. So that's one example. I mean, I am looking at, kind of the trades, home services businesses, other types of sort of what you might call boring businesses.
Plumbing and stuff like that, HVAC.
Yeah, those are all things that, those are all classic types of opportunities for investors. I think another cool opportunity for folks to consider who are, thinking about, who like that, the idea of boring businesses, so to speak, is that you could actually purchase one yourself and operate it, right? And so that's something that I think that a lot of people, I don't know if you've heard of the term entrepreneurship through acquisition. So what I've come to realize personally is that real estate is a great way to make money, but it's a slow way to make money. You're in it for the long game. You're not going to get rich overnight. For folks who want to kind of really bump their wealth more quickly, I think it's important to do business, right? And so I think about my own story, and the way I was able to reach income replacement wasn't through investing in real estate. It was through running an Airbnb business that just happened to have a real estate component. And so I think, and you can bootstrap something, but if you acquire a business then you already have, if you do it correctly, and check all the boxes for due diligence, et cetera, then you already have cash flow and revenue and systems in place, and you can work to optimize them. So that's just something that's kind of separate from the investing side. If you are a person who already has more capital to deploy, then being an investor in these types of opportunities is also another way to get a bite at the apple. So
Makes sense. How do you vet operators and people like that to work with? Obviously, you've underwrote so many deals, you've operated yourself, but what is that process like on your end?
yeah, so a big part of it is the relationships, right? So how am I coming into these opportunities? So I like to, I work with very few, I try to evaluate a number of different deals, kind of have that flywheel of deals coming across my desk that I'm evaluating so that I can continue to refine my criteria. Um, of course, the people that you're working with are going to be, same with real estate, the most important factor. And so, that's a big part of the due diligence. If the deal passes the initial criteria, is meeting the people, site visit, full financial review. But in terms of just actually like what types of businesses do I want to buy, or do we want to invest into, looking at the industry, where's the market at, how big is the space, how much specialized knowledge do you need, do we have a unique advantage, like what does the competitor landscape look like, what are we bringing to the space that other people aren't, what do the buyers look like? I mean, it's very similar to real estate, but it's in that specific niche of healthcare brokerage or plumbing or et cetera. So we have to start to be able to look at those deals more quickly. And so I have, a network of folks that work in M&A, and we review deals together, right? And so that way I'm getting continuous information, perspectives on, okay, and it helps me refine my criteria for what I want to bring to my investors.
Makes sense. So wrapping up here, you've been such a great guest. What are the opportunities are you most excited with as we kind of are in a weird economic spot? Just I'll timestamp it. We're in the first half of March here in 2025. So information's changing. We've kind of are in a crazy, fast-paced world right now, maybe more than ever. But what are some of the opportunities that are getting you very excited right now?
Yeah. So along the same kind of lines we've talked about, we have a deal that cash flows. That's you get either 20% or 25% return. I think that's a deal I'm very excited about. It's only a 3-year hold. And I feel very confident in the business operations and just really excited about the social impact of that deal as well. We have a land fund that I really like because we're in first position with 50% collateral or less, sometimes 30% collateral. And, we're able to deliver 10 to 13% returns on a quarterly basis. So that's just providing cash flow in an environment where not all deals are cash flowing, right? And then our private equity deals, we will have 1 or 2 of those this year, similar to the healthcare brokerage. I mean, we're waiting, obviously we're vetting deals every day, looking for the right fit. to bring to our investors. So, and then of course, I do love investing in like the Lone Star deals with some kind of tax advantage, a property tax abatement. So those, and then, so it all comes down to what does the diversified picture look like? Because it's not just one type of investment that's going to, get you to where you want to be in the long run.
Yeah, awesome. Well, thank you so much for breaking down everything. Suja, you've been an amazing guest today, and also most importantly, an amazing partner to us at Lone Star Capital. If people want to reach out to you to learn more about your investment strategies, private placement deals, kind of off-market exclusive kind of opportunities that are more niche in the alternative space that you've been able to crack, where can people find you, learn more, and reach out?
Yeah, absolutely. So you can always reach out on my website. It's luxe-cap.com, luxe-cap.com. Or if you want to email me, it's my full name, Sujata, Sujata, and it's luxe-cap.com. Or find me on LinkedIn. And I'll also just drop my phone number here in case anyone wants to shoot me a text message. We can find a time to talk. It's 650-804-8043.
Awesome. Suja, thank you so much for being such an incredible guest. I look forward to hopefully having you on in the near future. Congratulations to all the success. I wish you nothing but the best, particularly with all these fun deals you've got working on. For the audience that has been listening, thank you so much, and we will see you next week.
Awesome. Thank you, Craig.